All right, so hello everyone. Welcome back to another webinar here on A1 Trading. My name is Amy, as you may know. Today's program is again going to be a topic which is, I mean, as you know, I usually cover topics related to trading psychology because I believe that you don't need to, I mean, trading is not just about knowing something about technical analysis and fundamental analysis, but also about, the mental side of the whole story, But when I say trading psychology, be aware, I'm not talking about Freud, or I'm not talking about going back to your childhood, etc. It's more about giving you some strategies that you can apply to your overall trading performance. Yeah, it's not about going back to your childhood. It's more about understanding how the mental side of the whole story basically works. I hope you can hear me, and yeah. So let's start with today's program. 1 second. Where is it? Oh, here, yeah, Thailand. You see my screen now, don't you? All right. All right, and let me say one thing in addition to the whole, now what I feel like, don't feel offended, but what I feel like, maybe it has something to do with the generation, but what I feel like is there is not sometimes on YouTube, and that's the reason why I'm not present on social media, I feel like there is no real open-mindedness. People don't necessarily listen. They watch the first 10 seconds of a video and then leave a very superficial comment, such as, whatever. So if that's what you are aiming to do, I'd rather suggest you do something else which is more useful, because in order to understand the strategies I want to teach you today, you really need to watch the video from the very beginning till the end, because otherwise you won't understand anything, or it would be rather confusing for you. You understand? Okay, so today's program is, as I said, the title is "Why Do We Hold Losing Trades for Too Long?" But the title is a bit misleading, because I don't only want to focus on the question why we hold losing trades for too long. I do want to talk about why we sometimes make trades we know we shouldn't, but we just can't stop. Right? We sometimes trade in a certain way which is very unfamiliar to us, right? We just sometimes think, well, I knew that's an obvious mistake, but I made it anyway. This is the question I want to answer today, because the question is, can we change our behavior? Well, for sure, you can change your behavior, but bear in mind, it's going to be very hard, it's going to be very difficult, and that's the reason why only 10% make it at the end of the day, right? Only 10% of all the traders basically can live off day trading. So you need to be aware, if you don't take this as a 24/7 job, right? You basically, I can't imagine that you'll ever succeed. So let us focus on one thing. I think we all agree that we don't trade miserably all the time. There is, like, we have this moments of trading successfully, and then we've got this, moments when we make awful trades. I'm not talking about losses, right? I'm not talking about real mistakes. Real mistakes are very useful. Real mistakes are good for you, because real mistakes help you to, evaluate your own trading behavior, and they help you to learn. This is very important. I am talking about the mistakes that are obvious, right? And you make them, but you can't explain to yourself why you made those mistakes. And the root of this overall behavior is because it requires some sort of a behavioral change. That means this is the psychological side of the story. You understand what I mean? So now the good news for you is that we already know how to trade successfully, right? That means if you already know how to trade successfully, this is good news for you, because this shows two things. A, it shows that you have a working trading plan as well as a trading strategy. And B, it shows that you've got the intellect, you've got the understanding, you've got the skills that it usually takes to become successful. What you don't have is, or what you want to learn today is, how can you actually replicate those successful moments again and again? And how can you make these moments of, silly mistakes, how can you make these moments small? And how can you basically avoid the moments when you make silly mistakes, right? So today's topic is more about the mistakes that are quite obvious to you, right? But you just can't stop yourself from making these types of mistakes. So I hope you know what I'm talking about. Now, these are the four, so to speak, the four key areas or the four key elements I want to cover in today's lesson. I first of all want to talk about emotions. As you may all know, everyone out there, whenever they talk about trading psychology, they talk about emotions such as greed, fear, hope, etc. Yeah. Now, what I want to do today is I want to teach you to change the perspective. Emotions are not bad, actually. And saying to someone, to a trader, yeah, just be in control, be in charge of your emotions, won't do the trick. That's not helpful, guys. That's not going to help. And I can tell you, with time developing, you are going to learn to deal with greed, etc. This is just something that basically takes time usually. Today, I do want to talk about emotions from a different perspective. And then I do want to talk about how you can break the vicious circle of repeating the wrong behavioral patterns. And then we're going to talk about some useful practical advice is so that you can basically improve your trading performance. All right. Now, let me give you what I want you to do, first of all, is you can do this with any chart, actually. This one is the monthly chart, GBP USD. And you can open this chart on your screen because here it's just too small for you, maybe. Now, the important thing is I'm going to analyze the chart from a different perspective. I want to include all the existing emotions, all right? In order to show you emotions are nothing bad, emotions are actually the most important signals. If you ignore emotions, you have not understood anything about mass psychology, which is, mass psychology has a lot to do with trading, isn't it? So what we have here is GBP USD, the monthly chart. And just for you to clarify the situation, this one here is April, the candlestick right here, where we have the zone of 130 breaking. This is April, April, and then the long-legged green doji is May. April, May, June, July, August. All right? Okay. Now, in April, what we had a very special scenario there. The zone of the well-respected, multiple times tested zone of 130 and an important psychological zone of 130 broke. That means fear, real fear, got introduced to the market for the very first time. There is fear on the market. In May, participants on the market asked the question, well, maybe it was just a false breakout. That means hope started evolving, right? We've got the scenario of hope starting to evolve. Now, then we had the question, well, maybe it was a false breakout. That means there may be another or testing to that zone of 130. What then happened is that this idea basically got obsolete, right? That was in June. It got obsolete. There was no testing to that side of 130. What we had is, from the emotional side, what we had is another disappointment, yeah? That means June answered the question, this was a real breakout. This was not a fake out. which is a very important piece of information, because later on in July, we had again a second question, right? The question was, well, maybe now we can introduce some sort of a price correction, which then again, the second disappointment for the second time in August, the answer was no, there is no price correction whatsoever. So that means the current situation on the market is first attempt got disappointed, the second attempt got disappointed. So there is a lot of hope not fulfilled, which is a terrible situation. This is the emotion existing on the market. I'm saying this because there are some implications for September that I do want to highlight later on, all right? So that means emotions are natural ingredients and elements of the whole trading setup and the whole trading game. Saying ignore the emotional side, focus on logic, shows that you have no idea about neuroscience whatsoever, taken into consideration that 90% of all your action is controlled by your unconscious mind. So saying something like, I just focus on the logic, or I just trade in a rational way, is just rubbish. Just shows that you must have misunderstood something. What we have is a very emotional scenario. The market is so emotional. Well, of course, be in charge and be in control of your, basic urges and basic emotions. That's for sure. But that's true in, not only in trading, but in different other fields in life. So as you can see, there is a lot of emotion going on the market, and that basically means we can basically do our technical analysis plus our fundamental analysis, plus we can use emotions as a signal to read and better understand the market. For example, if you have a first attempt, right, a first attempt for a price correction, which then didn't get fulfilled, and then a second attempt, that basically means if I were you, I wouldn't be looking. In August, I wasn't looking for an entry point that I can hold for, for weeks or something like that. Because if I have a first attempt that failed, chances are high that the second attempt may fail it as well. You understand? That means this piece of information is very useful for me as a day trader when it comes to intraday trading, when I make decisions, right? Or when I'm not too convinced of a particular entry point. Yeah? And this also shows the first attempt failed clearly. That shows that I wouldn't necessarily look for, entry points close to important areas on an intraday level, because somehow they don't get, it seems to be a time where these types of zones basically just don't get respected, right? Times may change. Now, important thing is we can use those types of emotions as signals, right? This is a key takeaway of today's lesson. Use those, do your technical analysis, do your fundamental analysis, and then understand what type of emotions dominate the market and use them as signals. For example, for September, there are possible implications if we just focus on the emotional side of the story. Now, we had a first attempt, we had a second attempt for price correction. Now, that means chances are high that there will be a third attempt for price correction. And chances are also high that this third attempt won't work out very well because of this zone right here, right? We're getting closer to 114. And the interesting thing is, this is not a well-respected, multiple times tested zone. So that means at the moment, there is a lot of pressure on the market. There is a lot of fear on the market, yeah? And on the other hand, 114 is probably seen as something like a final glimmer of hope for, for an introduction of price correction. So there is a lot of pressure, a lot of fear. That means if I were you, or I'm talking to myself as well, I would be very careful when getting closer to this zone right here, because there is a lot of expectation, right? Traders expect price to correct, but as I said, the background story is we had a first attempt, we had a second attempt. Chances are high that the third attempt may fail as well, right? So that means you do an overall analysis on a monthly level. You try to understand the emotional side of the story and try to or basically ask yourself, what do these emotions imply for my intraday trading? And that's the reason why you use the monthly chart, you know, to have the bigger picture in the back of your mind, which is very important, because no intraday trading makes sense if you don't have the bigger picture in mind. Yeah. Okay, this is the emotional side of the story. Now, one key takeaway of today's lesson already is emotions are part of the game. That means it's not about ignoring emotions. It's about, in addition to your technical and fundamental analysis, what you do is try to read the emotions existing on the market and dictating the market, leading the market, and try to understand what type of implications these emotions may give you, right? This is the important side of the story. Focus on the question, what do these emotions imply for my intraday trading? Yeah. So that means forget about the advice, like, you know, when people talk about trading psychology is not the same as talking about just, you know, fear, greed, blah, blah, blah. Fear, greed, hope, etc. They exist. They are naturally part of the of trading, of all the trading setups. Now, something which is more important is what can you do when it comes to your own, you know, behavior on the market, your own trading. Now here, I once covered in my previous webinars on A1 trading that we have to somehow manage to cooperate with our unconscious mind, because our unconscious mind accounts for 90% of all our actions. That means it makes sense to dive deeper in that context and to see how we can actually implement the unconscious mind when it comes to improving your overall trading behavior. Now here I've got a quote by Dr. Mark Soms. He is a very well-known psychoanalyst and neuropsychologist. If you Google what I have here, the title right here, you could actually read the whole paper. But the main idea here is that he says perception at the end of the day is also part of your unconscious mind, right? And perception is something that means perception of the technique or of a trading chart. That means your reading and understanding of a chart is your individual perception. And the important element here is anyone else's analysis is an additional noise on the market. That means if I were you, I'd focus on my own analysis. I wouldn't listen to other people analyzing a chart, because that can be very confusing. This is your individual perception, right? Because at the end of the day, when you are supposed to take a trade, you are left alone with your perception, right? So that means it's not a benefit to you if you listen to several other people analyzing the chart. That's not going to help you. That's going to be very confusing for you, because this is their perception. There is no right or wrong when it comes to trading. There is no right or wrong. There is a perception plus a strategy based on a trading plan, right? Which is a very individual thing. Now, what I would suggest to you, this helped me tremendously. This is my personal holy grail when it comes to trading. What helped me is, and this is something I said in my previous webinars on A1 trading, I said before you open all the charts of all the currency pairs you trade, right? Make sure that you close your eyes, or you just go in the back of your mind, you repeat what the current chart looks like. That means the important zones, what the scenario is, what types of ideas you have, etc. You need to know the charts by heart. You need to have them in the back of your mind. Not knowing what the chart looks like and just opening the chart is not a good strategy, because the moment you open the chart, you have a biased perception, right? You automatically have a biased perception automatically. So if I were you, I would just run through the analysis just without opening the chart and go through all the currency pairs I trade. I would just go through them without opening the chart and repeat the ideas that I have in the back of my mind, and then open the chart and see what you can actually do, right? And what the current situation is, etc. So in order to prevent a biased perception, it's quite useful to basically it's quite useful to go through the charts before opening them, is what I would say. Now, what you can also do, there are two pragmatic solutions how you can improve your trading performance is, I think you all keep a trading journal, right? Now, what you can also do, this is something I mentioned in my previous webinar, but then I didn't explain how you can do it. I said there is not only, you analyzing the market from a technical perspective or fundamental perspective, but you also have to make sure that you're somehow analyzing yourself, right? Now, what I meant is you can actually map your own behavioral patterns, right? This is what you can do. That means there is not only the technical and fundamental side, but you can also keep a journal for your behavioral patterns. That means I would keep one. Usually traders have two major behavioral patterns that lead to, these miserable trades. Usually we trade very well, right? We know how to trade successfully. And then there are two or three, maximum three, there are two major behavioral patterns that destroy the whole game. Now, for these two behavioral patterns, I would create a map. And I would include these 4 steps, right? Now, I would write down, first of all, my emotions, then the cues, the triggers, then the behavior, and then the trading mistakes based on 1 to 3. That means, for example, let's say you didn't have any good trading setups. You didn't really make money in August, right? Let's say that's your situation, or that's someone's situation, or that's my situation, all right? Doesn't matter. So that means we feel it's September now, and it's a new trading month. So the first thing I would probably write down is that I feel stressed because of August not providing, any good trading setup. So I feel stressed, and because in the back of my mind, I got to make some money, right? I need to pay my rent, etc. And then number 2 is you're writing down the triggers. Back then, when I started trading 10 years ago, I always had a problem. My major trigger was Monday, right? On Mondays, I was always full of energy, and I was like, it's a new trading week and I just want to make money. I feel quite excited. I feel way too motivated. I want to make money now. So Monday was always for me a trigger for being too motivated, which is not necessarily good, because then you have this biased perception of, you know, reading too many, or yeah, just not or trying to find, you know, trying to find entry points, etc., or forcing yourself to find entry points. So what I then, yeah, so I wrote down it's Monday, or Monday is the trigger, right? Some people, for example, they have it, or they get triggered by these NFP Fridays, yeah? So that means this could also be a trigger. NFP could be an introduction, or could lead to the fact that you usually end up over trading and losing a lot of money, etc. So that could be a trigger. And then you write down your behavior. My behavior usually was, I was always on Mondays, I was, you know, forcing myself to find entry points and then over trading, etc. So that's the behavior you would write down. And then the trading mistake is over trading, holding losing trades for too long, etc. The problem is, if you never create such a map of these types of behavioral patterns, guys, you will never make it, because the problem is your unconscious mind. If you have once programmed your unconscious mind, right? If you have once created a certain habit, it's going to be very difficult for you to unlearn, or teach your mind to unlearn these types of structures. That means you need to work actively on these types of behavioral patterns. Really, you really do have to put extra work on getting rid of these types of patterns. And then step 2 is, this is step 1. Step 2 is, this is again the same thing, you know, this is number 1, number 2 is here, 3, 4. 2, 3, 4, right? They basically create a loop, right? They create a loop, and you keep on repeating the same mistakes again and again. And that's the reason why you can't escape this circle if you don't know how to break such a circle. Yeah? If you don't know how to break such a circle, you will end up making these types of mistakes even in 10, 20, 30, 40 years, because this is how your mind works. You won't automatically, out of the blue, unexpectedly unlearn what you taught yourself. That's not going to work. Yeah, you created with these routines, 1, 2, 3, you created a habit. You yourself, you actively created a habit that leads to failure. You now have to teach yourself how to break this circle. Yeah. Now, one advice would be, and that's also, one advice would be, make the useful triggers more visible. That means useful triggers such as writing down on a piece of paper, and writing down on a piece of paper that Monday is the major trigger for you, for example, or NFP days are the major trigger for you. That means you would write down not to trade on Mondays, right? Just not to trade on Mondays whatsoever. Training to become a successful day trader is not just about opening the chart and forcing yourself to find entries. It happens in different other fields. You can also train for trading using, you know, different other tools or different other things in order to get ready for Tuesday or Wednesday or Thursday. You know, you don't necessarily need to trade on a Monday if this triggers a series of bad habits, is what I'm trying to say. That means, first of all, make the useful triggers more visible, right? Write them down, make them more visible. And the unnecessary one, the ones that, you know, usually trigger a bad habit, make them invisible, make them very small. And if you want this on a higher level, that's one advice I can give you, and that's very helpful. That's very helpful. But what is even more helpful is creating a habit, or working with the strategy of habit stacking. So strategy number 1 is mapping sorry, is mapping your behavioral pattern, right? Is first of all understanding what are the 2 or 3 major behavioral patterns that lead to failure. First of all, recognizing those and then creating a map that makes you repeat the failure, makes you repeat the mistakes. First of all, becoming aware of it, becoming aware of the situation, and then make useful triggers that help you to, have these successful behavioral patterns, make them bigger, make them more visible, etc. And then if you want this on a higher level, you can actually work with the strategy of habit stacking. Habit stacking means you actively program your unconscious mind. You tell yourself what you're about to do. You basically, before you even get up, let's say you're still in bed, right? You're about to get up. You basically have these sentences in the back of your mind. After I get up, I will visualize my trading day, right? You imagine yourself sitting there and finding good entry points, etc. I will visualize my trading day. After I visualize my trading day, I will revise the relevant charts without opening the charts. And then after I revise relevant charts, I will open the charts to analyze them. After I analyze the charts, I will write down my strategies for the day. And after I write down my strategies, I will wait patiently, for example. Yeah. This is quite useful because this helps your brain. You give your brain or your unconscious mind, some sort of a direction, right? And this is quite useful. Sometimes people say, well, this looks like as if, if I had to use the strategy of habit stacking, this looks like, to me, this looks like as if you were not that flexible in your mind. That's not true. You have to try it. You become even more flexible because all of a sudden your unconscious mind is so obsessed with, just following a certain path. You don't want to get distracted. All of a sudden you are very much focused and you just don't want to get distracted because in the back of your mind, you programmed your brain and you just want to follow that particular path. So even if something occurs that you had not planned, you just want to solve that problem immediately in order to get back on track and in order to follow that particular path. And this is something I worked with and I still work with the strategy of habit stacking. It's very useful. It's not only useful for, day trading, but in general. So yeah, it is a strategy I think works very well. Together with this one, I'd say if you have a trading journal where you have only your trades, etc., I'm quite sure that, that's just not the whole thing. You need to know how your unconscious mind works. You need to know how you yourself, how you basically work. And creating a map is like looking in the mirror because you then all of a sudden you understand, oh, wait a moment, that was the emotional background. I was stressed, and then I had this trigger. The combination with stress plus the trigger led to this behavior. And number 1 to 3 leads every time I follow 1 to 3, I make this mistake. Yeah. And then what you can do is you can interfere and you can basically make the triggers that are disturbing, for example, smaller, right? Or even if this is the emotional background I have, first of all, make sure, for example, that you can face that particular emotional situation, or even becoming aware of it is going to help you a lot. Yeah, this is it. Actually, I'm already done. 34 minutes. Maybe it was fast. Okay, let me read some comments here. He did blow his account many times. He is very transparent about that. I think He lost. Yeah, but yeah, okay. And what's the point? What's the point? Everyone lost a lot of money. Every trader loses money because that's the game. It is, I mean, what I'm trying to say, I don't even understand. Everyone loses money. So the power of habits. Everyone loses money. I just think it's just a lot of rubbish out there. People posting very suspicious videos such as, I don't believe the market going up, I don't believe the market going down. It's your perception, guys. This is your perception. At the end of the day, it's your perception. What are you? Are you the super trader or what? Yeah, you are. This is your perception. This is your strategy. It works for you. You may share some of your strategies if you want to. That's it. Yeah. And let me say one final thing, that if you say, you know, focusing on technical analysis is important, right? Having a working trading plan and a trading strategy is important. Knowing something about fundamental analysis is important, right? And I also believe, and that must be the reason why only 10% at the end of the day make it, only 10%, that's awful, isn't it? Is focusing on the mental side of the story, yeah? And usually people just avoid it for years. And then years later, they come back. And if I were you, I'd absolutely avoid people who say currency trading is a scam. Just because it didn't work for you, just because you were too lazy to analyze yourself, just because you have no strategy and no understanding about neuroscience, and just because you don't understand how you can actually or implement strategies to cooperate with your, you know, unconscious mind, this doesn't mean that it's a scam. It's a scam to believe that it's a scam. If it doesn't work for you, it doesn't work for you. That's it. You can't make general statements like that. You understand? All right, I think that's it. If you have no questions related to my webinar and not to other YouTubers, what they share and what they don't share, because I don't necessarily care, are there any questions? Is something not clear to you? Yeah. And sometimes people even, you know, I know trading psychology is even, I think, not necessarily interesting for anyone. I'm sure nobody's watching this right now, but I can tell you, and this must be the reason why only 10% make it, guys. Only 10%. Be aware of it. Trading, from an intellectual point of view, trading is the simplest thing on earth. Trading is simple. It is very simple, but the mental side of the story is so difficult. It's a job that requires you to be fully involved 24/7. There is no free time, or there is no, I'm going to close this chart and then go back, you know, to something else. There is no such thing. That's the interesting part. Yeah. Okay, so yeah, I wish you good luck. No, I wish you all the success, guys, and hope September will be a much better month for you. And I hope you can improve your trading performance. And don't forget, we need strategies for the technical side, but we also need strategies when we really want to apply the psychological, you know, when we want to change our behavioral patterns. You need strategies, anything you do in life, that's for sure. Good, so I wish you a nice evening or whatever, and take care. Hope to see you next month, guys. Take care, bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.